think one of the biggest confusions for clients is probably the word tax and what all the various taxes, what it involves. Startup entrepreneur comes into my office and he's totally overwhelmed about all the various taxes and UIF and Department of Labor, and he just hear all the words, but he's not sure where to fit everything in. And so I think if we can just quickly break down, and we don't have to go into specifics and detail regarding everything, but I think just to give the followers and the listeners maybe an idea of the various taxes that we have.
Yeah, so I think just a place to start off with is people need to remember, as soon as your company registers at Cypro, they send that information through to the receiver of revenue, then that's when your first tax type basically kicks in, which is called income tax. And so it doesn't matter what company you registered for, as soon as it registered to a Cypro, you get an income tax number automatically. And the thing is about that income tax, or that tax, is not based upon the turnover of the business. It's actually based on the profits of the business. You know, there's different types of taxes where income tax only looks at the bottom line, whether they made a profit or not, and that is the amount that they're going to use to do the tax calculation.
Yeah, and apart from that, or further to that, is also you have your small business potential small business corporation. You can have very strict rules in the sense of personal service provider. It's not something that we need to tackle. I mean, that's subject on its own, and that we can discuss in detail. But that's the thing that your accountant can take you through in a consultation, especially the first consultation, to assist you identify in what category your business fall, and specifically small business corporation. I mean, if you can be there and qualify for that, your tax tables and your tax can be lowered quite dramatically.
Yeah, I think the second area where a lot of people stumble as well is as soon as they start employing people. I think that is, you know, most people when they start off with a business, they start off as an individual and they get going and they have the work coming in. But as soon as you start employing people, that's when you actually take your business to the next level. So as soon as you reach that stage where you start employing people, you need to start becoming aware of the other requirements that you must take into account. Even if you as a business owner, as soon as you start taking a salary out of the business, you should actually start worrying about the second tax, and that is pay as you earn.
Yeah, pay as you earn, and closely to that, UIF, skills development levy as well. But UIF and pay as you earn is probably even if it's only you that's in your company, you need to declare your pay as you earn on a monthly basis. You can't wait for end of the year provisional tax. You need to estimate a certain amount that preferably you take a monthly salary and not do drawing from the company. We talked about it last time as well. But yeah, in essence, you have income tax, you have the pay as you earn, you have UIF, and then ultimately you have value-added tax, or VAT, as people would know it.
Yeah, just I think a misconception that a lot of people has when it comes to UIF. A lot of people say that if it's only me working as a sole director in the company, I'm not going to fire myself. So why should I register for UIF? But the thing is, the Act makes it quite clear that as soon as you employ somebody, even if it's yourself, if you work longer than 24 hours in a month, you have to register for UIF. And that's something that a lot of people don't consider when their business is very small, is when to must actually register for UIF.
Yeah, maybe just quickly on that point, it's a bit off the subject, but it's even if it's only you that's employed in the company, people tend to think it's my company, it's me, but you're still employee of that company. You register a separate entity that would be a company, and you as an individual still need to pay the tax on a monthly basis as any other employee would have done.
Yeah. I think another thing as well, where a lot of people are not very sure about this when it comes to skills development levy, because you see this extra block on your pay as you earn returns every month where it says SDL, but the thing is, you don't know whether they must put an amount there or whether they must leave it out. But the Act, again over there, I think it's just people don't know about it, is that the receiver of revenue says that as soon as your turnover or your salary bill for the year is more than R500,000, you need to deduct 1% of those salaries, and then you need to pay that over to the receiver of revenue. So the big question that we find often is, as soon as the money gets paid over to the receiver of revenue, what then? Because the thing is, the receiver of revenue isn't the people that actually facilitates the whole skills development side of it. So you actually need to go try and figure out under which SETA your business falls, and that money gets transferred over to that SETA, and you need to actually register with them to get the benefits of paying STL.
Yes.